shares of Tesla, they are sliding today. They are now down over 19% year to date. For more on the EV maker, let's welcome in Colin Rusch, Oppenheimer Managing Director and Senior Research Analyst. Colin, it is good to see you. Let's start right there with the action we've seen in the stock. Down almost 20% now year to date. What explains that slide, Colin?
Yeah, there was a big rally in shares after the election, and there was a bit of a disconnect in our view between what's happening fundamentally and what was happening from a sentiment perspective. Certainly, the company has done a nice job of pivoting from just being a durable goods manufacturer and a vehicle manufacturer into physical AI, and that's something that we see as having long-term growth trends. The challenge, though, from our perspective, is what's happening with its legacy business. And we've seen cost reduction happen before in other industries like solar, LEDs, and batteries. And we're cautious on what's happening for the EV makers in China from a margin perspective. And so this morning, we're trimming numbers a little bit here on price pressure in China, as well as some potential backlash around some of Elon's extracurricular activities outside of Tesla.
And boy, his extracurricular activities are climbing every single day, Colin. Now, as you know, he has long been a multitasker. He heads a number of different businesses. He's involved now with Doge. Yesterday, we learned that he was leading a group bidding for the nonprofit entity that controls OpenAI. That seemed to be a tipping point for you, perhaps, that last item. After he's done all this other stuff, what is it about that particular headline?
It actually wasn't. We had the trim on the numbers ready to go, and so I actually had to adjust some of our writing after that news hit yesterday. We were ready to go prior to that, and for me that's just endemic of his interests. Like, he's got a wide mind and a deep skill set and a deep curiosity around the world and how it works. And I think there's an awful lot at stake with who owns and manages a lot of this AI IP, and so. From my perspective, we were really just worried on the fundamental basis, and in the OpenAI considerations, really, I don't think are really relevant to the stock just here. I think the bigger news today was more about BYD, a Chinese automaker, introducing some of its own self-driving technology, and that's something that Tesla has not gotten approved for in China at this point. And so it looks to us like the competitive environment is intensifying in China, and I think that's a bigger driver of what's going on with the stock today.
Let me ask you, Colin, I've also seen some make the case that they think Tesla is in some sense getting penalized here for Musk's allegiance to President Trump. Do you think that's also another variable at play?
It's he's gotten a lot of credit for being aligned with the regulatory authorities at this point over the last number of months. I think as we look at valuation and the company trading north of $1 trillion of market cap, there's a lot of anticipation around the potential value creation for the platform. And, over the next couple of years, we see it being a little bit challenged. We think numbers are too high on the street. We're near street low for both this year and next year on vehicle deliveries. And I think that's a bigger issue for the stock here to really work. Should Tesla not deliver on a number of promises that they're making around both autonomous vehicles and the humanoid robots.
Well, I think, Colin, some of the assumption by some on the street who continue to be fans of the stock is that, Musk being so close with Trump will help his business endeavors, could help him get FSD approval. But I guess what you're saying is, if FSD tech isn't ready, the approval is sort of irrelevant.
Yeah, and I think that's a fair point. And also, political winds shift pretty quickly. There's an election in Germany in a couple of weeks. We're watching that pretty closely. Elon's gotten involved in that. And one of our concerns is around European consumers not buying Tesla vehicles because of political reasons. There's a lot of other options on the market, and we see that as a potential risk for sales this year.
Colin, after this slide, final question here. I'm just curious, what does valuation look like for this one?
It's hard to peg it. Certainly there's a lot to figure out here. From a autonomy perspective, there's a couple of ways to look at the opportunity in terms of vehicle miles traveled and monetizing those. And so we can see our way to $1 trillion type valuations. I think what we want is some evidence that the company's really making real traction in that direction. And so far, what we're seeing is numbers continue to drive get softer and softer. here over the last couple of years, and we want to see a little bit more meat on the bone from the company.
And sort of on a related note, Colin, am I reading correctly that you don't have a price target in your note on Tesla?
That's correct. We don't have price targets for perform-rated stocks, and that's something that we don't have to publish, and so we're not at this point.
Gotcha. Colin, thank you so much for your perspective. Appreciate it.